No other NBFC in the country has charted the kind of loan growth and profits that Bajaj Finance has over the past decade. This is because, unlike the other NBFCs, Bajaj Finance is also partially a tech company. It's the largest user of Salesforce in the world. It employs more technocrats and data scientists than most other fintech companies in India. The company potentially has a bigger data repository on lawyers, doctors, engineers, and other professionals than any other lending business. Bajaj Finance has managed to leverage lending data and credit demand across the customer profiles and geographies. Going forward, it is well poised to grow its asset under management from a healthy mix of digital and physical loan distribution centers. Over the past decade, the company has added many new offerings such as e-commerce consumer finance, e-commerce seller finance, and warehousing receipt finance. It recently listed its housing finance subsidiary, Bajaj Housing Finance, to unlock value for shareholders. Bajaj Finance's data-driven lending has allowed the firm to not only lend to the most creditworthy borrowers, but also bring the borrowers who were neglected by banks into the formal credit ecosystem. This is evident in the fact that despite healthy growth in loan book over the past 2 decades, the share of new customers in Bajaj Finance customer base has always remained around 40%. The Tata Capital IPO, which garnered heavy investor interest on the premise that it could also leverage its group's network and reputation to become a compounding machine like Bajaj Finance, has yet to prove the stock's worth. But before drawing such conclusions, investors would do well to recognize certain key differences between the two NBFCs. In May 2025, Tata Capital merged with Tata Motor Finance, becoming the sole finance entity in the Tata Group. The merger allowed Tata Motors to exit its non-core finance arm and offered Tata Capital exposure to its vehicle finance portfolio. But mind you, vehicle finance does not always add value. Sure, it adds to the loan book size and revenue, but Tata Motors Finance chipped away at Tata Capital's profits and dragged its asset quality lower. Excluding the vehicle financer, Tata Capital's profit for the year ending March 2025 was about 3.71 billion. Including it, it fell to Rs 3.67 billion simply because Tata Motors Finance incurred a loss. By itself, Tata Capital's non-performing assets ratio in FY25 were well contained at 0.5% of total loans. Adding Tata Motors Finance to the mix, and the number increased to 0.8%. That's because by itself, the latter's NPA during the year was as high as 4.4%. Tata Capital's standalone return on equity was 14.2%, but Tata Motors Finance dragged it to 12.6%. Therefore, swallowing the bitter pill of vehicle finance became time-consuming for Tata Capital. Meanwhile, there are few differences in the core business too. Bajaj Finance's key competitive edge and bulk of its key business in consumer finance, particularly through its massive EMI network for consumer durables, electronics and lifestyle products, is different. This is highly specialized quick dispersal model, and it has been the engine for rapid growth and profitability. In FY25, Bajaj Finance took initiatives in the areas of digital platforms, Gen AI, cybersecurity and more. The company invested in Bajaj Pay, which is transforming into a substantial payments infrastructure. Bajaj Finance also invested in other platforms to build social commerce. Its rewards platform went live in April 2024 and consumer platform in June 2024. Tata Capital, on the other hand, operates a more broad-based, one-stop financial solution provider. While it has a large retail and SME book, it is also having a significant presence in corporate, institutional and commercial finance. By that I mean equipment finance, construction finance, structured products. Tata Capital also offers a fuller spectrum of financial services, which includes wealth management and investment banking services for both retail and corporate clients, in addition to its lending products. So, Bajaj Finance primarily focuses on lending, deposits and related financial products, with its core strength being its massive consumer base and distribution network. Tata Capital benefits directly from the Tata Group brand, which often translates into lower borrowing costs and customer acquisition benefits. There's also a key difference in terms of the cost to be incurred for using the brand reputation. As per the IPO DRHP of Tata Capital, under the Tata brand agreement, Tata Capital is required to pay an annual subscription fee of 0.25% of its annual net revenue to Tata Sons. In terms of the said agreement, Tata Sons has the right to review and revise the subscription fee from time to time. Bajaj Finance makes no such payments to Bajaj Finserv. Bajaj Finance leverages the strong financial brand of Bajaj Finserv, but its success is largely attributed to its operational agility, digital prowess and customer-centric product innovation, allowing it to scale rapidly and maintain superior profitability. While the valuations of Tata Capital are not exactly cheap, they are relatively lower so far than that of Bajaj Finance. Nevertheless, investors would do well to evaluate the longer term prospects of the NBFC rather than assuming the creation of yet another Bajaj Finance too soon. Happy investing. Hope you like this video. Thanks for watching.